Welcome to this week's episode of Financially Speaking. As a local family-built firm, Bushka Retirement Solutions, along with its affiliate companies Bushka Wealth Management and Legacy Tax Solutions, offer one-stop retirement, tax, and legacy planning services to families nearing or already enjoying retirement. Sue Bushka is president of Bushka Retirement Solutions, a retirement planning company helping develop financial, Medicare, and health insurance strategies. Over a decade ago, she partnered with her son, Cole Bruner. Cole, an investment advisor representative that's held to a fiduciary duty, is president of Bushka Wealth Management, a fee-based registered investment advisory firm providing financial planning and investment management for individuals and businesses. Legacy Tax Solutions offers personal and business tax planning and preparation services. Their enrolled agent, Carl Van Setters, is a military veteran with over 10 years of accounting experience and is committed to maximizing your tax credits wherever possible. Over the last several years, Sue and Cole have continued to grow their team of private wealth advisors to meet the increasing demand of retirees seeking guidance. In 2018, Ryan Connor began serving clients at their Eau Claire location. At their Wausau location, Logan Wooler became a part of the team in 2020. And in 2023, Sue's daughter Kaylee Berenson joined the firm. As a family-built firm with offices in Wausau and Eau Claire, their dedicated team of professionals have the experience to provide custom-tailored strategies to help you achieve your long-term financial goals. The next 30 minutes will be filled with retirement information presented by their team in a simple manner that you can understand. So stay tuned because Financially Speaking starts right now.
We're going to be answering some questions that we've received from our viewers about life insurance and how that can help contribute to wealth and legacy.
Today we're going to talk about Social Security and the recent cost of living adjustments, or COLA.
Now today, Logan and I are going to talk about how to prepare for unexpected things that could happen during retirement, such as natural disasters.
And now for our weekly question and answer segment.
Welcome back to Financially Speaking. Today I'm here with Cole and Kaylee from Bushka Wealth Management and Bushka Retirement Solutions. We're going to be answering some of your questions about planning for retirement, but if you'd like to see a question answered on a future segment, please email us at info@retirewithbushka.com. Cole, Kaylee, thank you so much for joining me today. We're going to be answering some questions that we've received from our viewers about life insurance and how that can help contribute to wealth and legacy.
Sure.
So Kaylee, I'm going to start with you. How does life insurance help contribute to wealth?
Well, I think there's three main reasons why people get life insurance, and so usually that's going to be legacy, cash accumulation, otherwise long-term care planning. So legacy, I mean making sure that your family is financially stable if something were to happen to you. And then cash accumulation, that's a great thing that people can take advantage of for a tax-free bucket, especially if you're a high-income earner and you can't contribute to Roth IRAs. Definitely looking at the avenue of life insurance for cash accumulation can be really beneficial. And then lastly, long-term care insurance. So traditional long-term care policies, they can be pretty costly, and if you don't use them, then you've never really benefited from it. So life insurance companies have gotten a little bit more creative to couple that with long-term care, and then at least if you don't use it, hopefully you have that cash accumulation bucket to pull from. Otherwise, at least you have that legacy to leave at the end.
Absolutely. Yeah, I agree with all of that. I think that those are probably some of the most commonly utilized reasons, other than that, maybe debt repayment, but oftentimes that's like a limited, kind of time frame. So term insurance could be used for that type of situation. But you're right, that life insurance has come a long way in the benefit that it provides. And so taking a look at that as a potential contender for your retirement plan could make a lot of sense.
Absolutely. And how could that life insurance also be used as an estate planning tool, Cole?
Well, I think oftentimes life insurance as a a legacy planning tool is commonly overlooked. You know, a lot of people think of, I need life insurance to repay my mortgage or to replace my income or my salary if I were to pass away. And then often we get to retirement age and we're like, okay, I don't have a need for life insurance anymore. And we see all the time where clients desire to, you know, leave a lasting legacy to their family or to, you know, something that they're passionate about, whether it be a charitable venture or something along those lines. And oftentimes if we bring up the conversation of life insurance, we're like, no, I don't need life insurance. You know, I'm beyond that stage of my life. And it's like, well, wait a minute. I mean, if we're considering a way to increase the size of your legacy, and it means us directing a certain amount of money into a policy that's going to create a much larger portion of your portfolio that would go to that person or, you know, people or entity at that point in time, does that not solve the problem of legacy planning or increasing the size of our legacy, I should say? So I think it's at the very least worth an investigation to determine, does this particular tool make sense for me? And if so, what would be the best tool to utilize to incorporate into my plan?
All right, so Cole, you talked about enhanced planning using life insurance, and Kaylee, you talked about long-term care insurance and cash accumulation. These all sound like great reasons to use life insurance, but I'm sure there are some things that people should consider before jumping to the conclusion that they can use life insurance as a solution. What are some of those things?
Well, I think the two main points that I would make in regards to, you know, things to be aware of or potential drawbacks is a lot of times we may have a desire for life insurance, but we might not qualify for life insurance. There is that insurability component where we have to be insurable, and obviously the insurance companies are going to look at, you know, medical history and they'll want us to do what's called a paramedical exam, which is where they send a nurse out and do, you know, blood sample, urine sample, and height and weight, and ask you a whole list of 100 health questions and all that fun stuff. And it's because the company wants to make sure that it's an acceptable risk, obviously, which makes perfect sense. So there's the insurability component, which a lot of times when we're thinking about life insurance in terms of legacy planning, we're thinking about that in our later years. So sometimes we have a conversation with clients about life insurance, and it might not be a solution for them because they may have had a health issue that prevents them from getting coverage, or they might have ongoing health concerns, or, you know, medications that would prevent insurability, whatever it might be. So even though it might be a desire, it might not necessarily be an option for that reason. Also, keep in mind that life insurance is an expense at the end of the day. We are going to have to make sure that we budget for that we can maintain that premium. There are some alternative solutions. There's single premium life insurance policies where we just dump in money up front and then we don't pay ongoing premiums. And then there's also, you know, premiums that we pay for a period of time or for our lifetime. So it just kind of depends on the budgetability of that. But it is something to be aware of, that with that benefit, with that additional value that comes with it, there will be a cost. So being aware of the fact that there's going to be a cost involved, and we have to qualify for the life insurance, and we have to have a need for the insurance. I mean, the insurance companies don't want you going in and buying a $10 million life insurance policy just because you want to. You know, you kind of have to have a reason to have that coverage, so the company isn't speculating, what's going on, you know? Are there nefarious things happening in the background? So I think it's just being aware that there's obviously going to be some give and take in terms of that when it comes to qualification, and then also the budgetability of it.
So Kaylee, that sounds like a lot to take into consideration. How could someone work with a financial advisor to help them work through that?
Well, I think working with a financial advisor is, very important because it's getting to know your client. We need to ask the right questions so we can identify if they have a need for life insurance. Some people do need it, some people don't. And so when we dig in and we ask the right questions and we do that fact and feeling finding, it helps us, identify those needs and make people aware that maybe they didn't even know they needed it, but really it could benefit them in the long run to have a comprehensive and holistic plan.
Mm-hmm. Yeah, it's looking at everything, and especially when it comes to an outsider's perspective. Sometimes we don't see the things that might be right in front of our face because we don't realize what we should be looking for. And from a financial professional standpoint, we're the outsider. We're coming in to, help diagnose any missing pieces that we see from our experience and our knowledge and our, our education, and be able to provide solutions based on that information. And so I think working with that professional is really going to be the best way to determine what makes the most sense, and of that, then what solution within that category makes the most sense, and what can we afford to accomplish within our plan.
Absolutely. Well, that's a lot of questions about life insurance. I'm sure we could talk more, but unfortunately we're out of time today. So thank you both for joining me, and thank you all for joining us. We'll be back with more right after this.
Are you ready to take control of your retirement? If you're 59 and a half or have recently changed jobs, it may be time to consider a 401k rollover. With a rollover, you can consolidate your old retirement accounts into a single investment vehicle. Say goodbye to scattered funds and hello to more diversified options. A rollover gives you the freedom to choose from a wider range of options tailored to your unique financial goals. Don't let your retirement savings gather dust. Reach out to speak to one of our advisors today to explore the benefits of a 401k rollover. Are you ready to make your retirement planning more stress-free? I'm Cole Bruner from Bushka Retirement Solutions, Bushka Wealth Management, and Legacy Tax Solutions. Between our three companies, there's a lot we can do to make securing your future easier. By creating a comprehensive retirement plan that incorporates retirement income solutions, investment management, estate planning, tax strategies, as well as health insurance and Medicare planning, you can retire with more confidence and peace of mind. Call us today or go online to schedule your complimentary review.
And now, our Financially Speaking weekly topic segment.
Welcome back to Financially Speaking. I'm Logan Waller from Bushka Retirement Solutions and Bushka Wealth Management. Today we're going to talk about Social Security and the recent cost of living adjustments, or COLA. There was a good news and a bad news when the Social Security Administration announced its latest cost of living adjustment in October of 2024. A CNBC article titled Social Security Administration Announces 2.5% cost of living adjustment for 2025, lowest increase since 2021, has some timely details. The good news is that nearly 73 million Americans will see their monthly Social Security payments increase by 2.5% in 2025. On average, according to the article, most people see an increase of about $50 a month. The bad news is that it's the smallest COLA increase since 2021's 1.3% increase. Thanks in part to the pandemic-sparked inflation in 2022, the COLA was 5.9%, and in 2023, it was 8.7%. The 2024 COLA was 3.2%. Each year, the COLA is calculated based on a portion of the Consumer Price Index called the Consumer Price Index for Urban Wage Earners and Clerical Workers, or CPI-W. The percentage increase in the CPI-W from the third quarter of the previous year to the third quarter of the current year determines the COLA. So, how much more might you expect to get? If you're currently receiving Social Security, you can get a solid approximation of how much your payment will change by multiplying your current monthly amount by the percentage increase, which again is 2.5%. If you want to be more precise about how much larger your monthly payment will be in 2025, it's helpful to consider Medicare Part B premiums, which are commonly deducted right from your Social Security payment. The standard Medicare Part B premium has increased to $185, a modest increase from 2024's $174.70. Additionally, the larger your Social Security check, the bigger the increase you'll see in your monthly payment. And because benefits increase by 77%, if you wait to file from age 62 to 70, the COLA increases is further evidence that waiting as long as possible up to age 70 to file your Social Security can have a very real and very lasting advantages. If you can't wait until you're 70, you should at least wait until you reach your full retirement age. Currently, the full retirement age is 66 and 2 months for people born in 1955 and gradually rises to 67 for everyone born in 1960 or later. The age at which you initially file for Social Security is the single biggest factor that determines the amount of your monthly payment. For the first time this year, the Social Security Administration provided a one-page COLA notice that detailed benefit amounts, including any deductions. COLA statements are also available online. However, recipients must have had a My Social Security account before November 20th to see their notices. You can create an account by visiting the Social Security Administration's website. Your financial services professional would also be able to help you set up an account. To set yourself up for success in retirement, you may need to think bigger than Social Security. Heading into retirement with Social Security as your only source of income is going to present you with challenges when it comes to maintaining your preferred lifestyle. As you consider your retirement strategy, view Social Security as a piece of your income puzzle rather as the entire puzzle. It's important to have other income sources like 401k, IRAs, and investments. And don't worry, you don't have to design that mix yourself. Your financial services professional will be able to guide you. Before I wrap up this segment, I want to share another bit of Social Security news. President Biden recently signed legislation called the Social Security Fairness Act. CNBC reported on this, stating that the legislation got rid of the windfall elimination provision and the government pension offset. For 3 million public workers such as police officers, teachers, and firefighters, this could mean an increase in Social Security benefits. Many people were unaware of these provisions and were often surprised to learn that they'd be getting less from Social Security than they expected. If you or your spouse is expected to receive payments from a public pension as well as Social Security payments from other work, you may want to find out how this new change is going to affect you. If you'd like to talk about Social Security benefits as well as how to create other income sources for your retirement, contact our office at retirewithbushka.com or call 715-355-4445. We'll be right back with more Financially Speaking after this.
You've worked hard to save money for retirement, but wouldn't you rather thrive and not just survive your golden years? My newly released book, Golden Rules of Finance for the Golden Years, offers key tips for managing your retirement money and ensuring you have a more complete plan to make your retirement dream a reality. Call 715-355-4445 or visit bushkabook.com to request your complimentary copy today. Taxes can play a significant role in retirement. After all, they determine how much of your hard-earned savings you get to keep and how much you send to the IRS. But if you're like many savers, you probably don't know the total taxes that you could end up paying. At Bushka Retirement Solutions, we believe information is critical to making informed decisions. So I want to share with you a resource that can help quickly evaluate your potential taxes in retirement. Visit bushkaretirementtaxbill.com to generate your personalized report. And once you've seen your retirement tax bill, let's talk, because there may be ways to improve those numbers.
And now our Financially Speaking weekly desk segment.
Welcome back to Financially Speaking. I'm Sue Bushka from Bushka Retirement Solutions, and joining me today is Logan Waller. Now today, Logan and I are going to talk about how to prepare for unexpected things that could happen during retirement, such as natural disasters.
That's right. An Investopedia article titled Preparing for the Unexpected Retirement Planning and Natural Disasters offers some ways to plan ahead and set yourself up to be able to recover should an act of God strike you.
An act of God?
Isn't that what they call it when a tornado takes you off your roof?
Well, sure, it just sounded dramatic the way you said it.
True. Natural disasters are dramatic.
All right, well, let's dive into the drama, shall we? The article states that in 2024, there have been 20 confirmed natural disasters that resulted in losses of more than $1 billion.
See, dramatic.
Now, the article goes on to say that most baby boomers live in states like Florida, Texas, Arizona, and the Carolinas, which are all areas that are more prone to natural disasters.
So people move to their dream retirement homes in warm states and then lose it all to wildfires, hurricanes, and other disasters.
Exactly.
So moving someplace where you'll never have to shovel snow certainly has trade-offs, doesn't it, Sue?
Well, it sure does. And first, let's go through the different types of natural disasters and the impact that they can have. The first type of natural disaster is, as the article mentions, is hurricanes. And it says that retirees need to understand that hurricanes can cause flooding and serious damage.
If you had a lot of heirlooms and keepsakes, a flood could wipe them out completely. If you have a 120-year-old portrait of your great-grandmother as a young girl, be aware that if you move to an area with hurricanes where they could strike, you could lose something irreplaceable.
Exactly, and the article also notes that during hurricanes Irma and Katrina, death rates among nursing home residents were higher.
So if you have elderly parents and it's up to you to decide where they live, make sure any facility you consider for them has an ironclad disaster plan.
Now that's really a great point, Logan.
So we know hurricanes can wreak havoc on retirement plans. What about earthquakes?
Earthquakes are common in California, so if you plan to retire in the Golden State, be aware that your house could sustain some structural damage.
Do retirees move to California? I'd expect retirees to avoid it given how expensive it can be.
Well, a Smart Asset article shows that more retirees move out of California than move in, but retirees do move there.
So if you are one of the relatively small number of retirees who move to California, make sure your house is up to code and has the structural integrity to withstand an earthquake. Now, what about tornadoes, Sue?
Tornadoes happen more frequently in some places than others, but they can and have happened in all 50 states. Approximately 1,200 tornadoes happen across the country each year.
And what about floods?
Well, senior populations in coastal areas have been growing steadily since the 1970s, which means more and more seniors are at a risk for catastrophic flooding. A beachfront home may seem like a dream come true, but you do need to think about what might happen to you if there is some sort of oceanic event or heavy rainfall.
There goes my imaginary Hilton Head condo.
Well, if you ask folks in Georgia, they might tell you that Tybee Island is better than Hilton Head anyway.
Oh, both of those places are a long way from Wisconsin. But wildfires aren't. According to WSAW, we had more than 700 fires in 2024.
That's right. Wildfires can strike anywhere, so you probably won't be able to choose a home that is 100% wildfire proof, but you can avoid areas where fires are more common.
So, Sue, we've covered all the different types of disasters that can wreak havoc on retirees' dream homes. Now, let's talk about what retirees can do about it.
Nice transition, Logan. The first thing the article mentions is preparation costs. If you're going to move to a place where natural disasters are a factor, you need an emergency evacuation plan and you need emergency funds.
Doesn't that include insurance?
Yes, you may need a different type of coverage depending on what type of disaster you may face. So, for instance, if you're in an area where hurricanes are common, you may need windstorm insurance. If you're close to a waterfront, you may need flood insurance.
Most standard homeowners' policies don't cover natural disasters like floods, earthquakes, landslides, and so on.
That's right, and that's why additional coverage is often necessary.
So, if you're going to retire to one of those areas, you need to factor the cost of the additional coverage into your retirement budget.
That's right.
Those costs can be significant, especially when you consider the fact that affordable policies are getting harder to come by.
Well, that's true, and on top of that, some insurers are no longer issuing policies in certain states.
Still, insurance is important because it can help keep your retirement nest egg safe. In my opinion, retirement should be a time for peace of mind, not uncertainty.
I agree, Logan. In addition to insurance, you may also want to have an emergency fund. You may want to have at least 6 months worth of expenses saved up.
If there's a hurricane warning, you should have enough money to bug out and stay somewhere safe until the storm passes.
Bug out?
I've been watching old episodes of MASH. When they have to move to the hospital, they call it bugging out.
Oh, okay. Okay, I see. Well, I agree with your point. Imagine you have to leave town and have to scrape to pay for the hotel. Or imagine that your insurance policy covers some of the damage to your home, but you still have expenses to pay out of pocket. Having money in an emergency fund can make things possible.
Sue, when you factor in the higher costs of insurance and the need for emergency funds, do you think moving to a hurricane or flood-prone area is still worthwhile?
Well, that's a call people have to make for themselves. For some people, it won't be worth it, and they'll choose to stay in an area where the risks of natural disasters are lower. But others may see giving up a home in their dream location as risking their whole retirement because they're denying themselves the life that they want.
Do you think lower costs of living in certain areas can offset the higher costs of insurance?
That's possible. There are a lot of numbers to crunch when choosing a retirement destination.
What are some of the other things people should be aware of?
Well, there may be relief programs available to people affected by natural disasters. Before you move to someplace like Hilton Head, you may want to learn about relief programs and check out FEMA's risk maps to see whether your dream home is in an area that's likely to get hit.
So, how do natural disasters affect pension plans?
Well, natural disasters can have an effect on the market, which in turn can hurt pension plans that are invested in the market.
So that means natural disasters can hurt 401ks and IRAs too?
That's right.
That means retirees can be affected by natural disasters even if they have and live nowhere near the disaster zone.
Right again.
What can retirees do about that?
Well, the article suggests ensuring that your investments are diversified. Put your money into different asset classes. That way you can reduce your exposure to any one sector that could get slammed with a natural disaster.
If you want a safety net, consider putting some of your money into a low-risk assets. You may also want to regularly review your investment strategies to make sure they are aligned with your financial goals and risk tolerance.
I agree with all of that. Plus, there are financial planners who specialize in disaster relief programs and who can help you find a good location for your retirement home and find ways to help protect your retirement funds.
That's great. And with that, we are out of time. If you have questions about working to safeguard your retirement from natural disasters or about your financial strategy overall, contact our office today at retirewithbushka.com or call 715-355-4445. And with that, we're out of time. We'll be right back with more Financially Speaking after this.
Are you ready to take control of your retirement? If you're 59 and a half or have recently changed jobs, it may be time to consider a 401k rollover. With a rollover, you can consolidate your old retirement accounts into a single investment vehicle. Say goodbye to scattered funds and hello to more diversified options. A rollover gives you the freedom to choose from a wider range of options tailored to your unique financial goals. Don't let your retirement savings gather dust. Reach out to speak to one of our advisors today to explore the benefits of a 401k rollover. Are you ready to make your retirement planning more stress-free? I'm Cole Bruner from Bushka Retirement Solutions, Bushka Wealth Management, and Legacy Tax Solutions. Between our three companies, there's a lot we can do to make securing your future easier. By creating a comprehensive retirement plan that incorporates retirement income solutions, investment management, estate planning, tax strategies, as well as health insurance and Medicare planning, you can retire with more confidence and peace of mind. Call us today or go online to schedule your complimentary review.
Thank you for tuning in to this week's edition of Financially Speaking. We're glad you were able to join us today, and we hope that you learned some useful retirement tips along the way.
On today's show, we covered a number of important topics, and hopefully we did so in a manner that was easy for you to understand. This is the same way we communicate to our clients when we meet them in person. Remember, with the help of the right financial services professional, you can create a quality retirement, and our team is here to help. Right now may be a great time to get a second opinion on your retirement plan. Call us at 715-355-4445 or go to retirewithbushka.com to continue your retirement education, catch up on previous episodes of our TV and radio show, or schedule your complimentary, no-obligation consultation.
If you have any questions or comments about today's show, call us at 715-355-4445 or feel free to send us an email at info@retirewithbushka.com. Join us next week at the same time and same place for another episode of Financially Speaking.